Hey everyone, hope you're having a good day. My name's Andy. My channel is Finding Value. Today we're going to do our daily technical analysis, updated commodities, work our way through the dollar, yields, precious metals, and commodities ETFs that I follow. I'll interject my financial opinions as we go through it together. If you need help with anything, check out finding-value.com. That's where I dive deeper into all of these subjects, topics, areas, looking for potential investment opportunities and sharing those opportunities with everyone in the community. We do have a discount going on. Specials the coupon code. So it's special that you write in the coupon code. 50% off the first month only on the monthly membership to try it out. Or you can switch to a yearly membership and get a larger discount. Those that are already signed up for the yearly membership most likely already have the larger discount. So let's dive in, take a look, see what's going on today. Looking at the dollar, and I'm just going to back out here. I usually take it from a short-term thing. Again, these bull markets, uh, they occur. Commodity bull markets occur from that circle to circle. So the bull market is when the dollar drops every single time, and the ratio of commodities versus stocks are favorable during those bull arrows. So this one here, we are expecting a bull market in commodities with the dollar to decline. And that's exactly what we're starting to see. We're seeing a decline in the dollar. Now, is this going to be a sustaining move? It could be. If you look from this perspective, we haven't really had a big bounce here. So the momentum is still down. We haven't bottomed, at least yet. And the momentum is still to the downside, which is good for a commodity bull market. When the dollar gets weaker against other currencies, money starts to rotate out of dollar denominated assets that are all stuck over there in financial assets. The bond market has unwound to some degree. The next step is to unwind it out of the stock market. Yields have been falling. Today we were down 0.4% for the 2 year. Now, this isn't a straightforward looking deal here. We fell pretty good. Then usually you get a consolidation. Consolidations that are bearish generally work their way upward like this, and then we could fall lower. Now, that very well could be the possibility here. I will leave that in drawn a little bit better than what I did. This could be a potential upward facing pattern that we are trying to break to the downside, depending on how you draw this. We're kind of early in this move, so it's not well known as you go through it what the pattern will necessarily be. The 10-year, it's got a very similar pattern here, and I'll redraw it. That's why I'm drawing it on the 2 year as well. Because a lot of these, they just mimic the same thing. It looks like we're trying to break to the downside here. And then we have the 30-year, same pattern. This one's right on top of support. There's the support level there, right on top of it. So we're on top of support, and we'll see if we break to the downside. And again, this is a bearish formation here that's broken to the downside. Looking at TYX TNX ratio, we are breaking to the upside. Nice little bullish engulfing yesterday. Follow through today. And what I use this for is this is where you want to enter gold during this ratio. And then when it uninverts, that's when gold generally goes higher. And this is only specific to gold. Silver, it doesn't track it as reliably. And silver generally does real well towards the later end of it. So gold is the leader, and that's kind of your entry points only for gold. And then silver starts to follow somewhere later on over here, or when it starts to go on up. TLT bond prices are up slightly, but we are still stuck in the mud. Small little candlesticks kind of in both directions here. Momentum is to the upside in the very short term. The reason I'm saying that is from this bullish engulfing candlestick here. That's a turning point higher. The 2 and the 10, we have slight yield curve uninversion. coming back down, but it's still favorable to invert the curve. So if I were to give you gain some perspective, uninversion is when it pulls back this way. That's when gold goes up, safe haven assets. Usually, if the 2-year falls in relationship to the 10-year like these are like events. It's not good when they fall vertically like that. On each one of those events, 9/11, almost as if they knew it was coming before it occurred. That's why everybody was diving into bonds before these events. But we haven't seen a dive bomb yet. Very well could come, and that's what we're watching for. Gold's up $12 an ounce today. Not a great looking candlestick, but nonetheless, it's up $12 an ounce. We've got silver, which is slightly lower, down 0.35%. It still looks good. This isn't a strong selling candlestick. It was purchased throughout the day. That's what the big wick is on the bottom. Everything looks okay to still go higher. Platinum's down 1.6%. We are still jammed into this corner here, trying to break out. We'll get there, guys. We'll get there. There it is. That's today. Still looks okay, and we're still squeezing up. Palladium down $7 an ounce. Looks like we got a little bit of selling pressure in this little pullback. We do have good support through here, right where we're at. GDX down slightly, GDXJ down slightly, and SILJ down slightly. But these are all bullish formations. Think of them as flag patterns, which are continuation patterns to the upside. They're just different varieties of flag patterns on all of these and the steepness of them. But all of them look really good from the long-term perspective, and I do think they're all going to go higher with gold and silver. XAU to gold ratio, again, this is incredibly cheap, and I have long runway ahead of us for gold and silver mining companies to outperform gold. Crude oil up 2%. Up 2%. Is this the beginning of a potential move? It could be. It could be. Why do I say that? Well, when you look at these big green candlesticks and they start to come into the picture, I'm not stating that this is 100% the bottom, but it could be the bottom. And what we look for are the big green candlesticks, and then we want to see small red candlesticks. That's the trait that we're looking for. So would I buy down here? I would, because I know we're $25, roughly $20 to $25 undervalued, given commercial inventory levels. We're cheap against gold. The oil to gold ratio or gold to oil ratio, very cheap compared to history. So I'm patient. Even if we take a detour like this, which I don't think is likely, not with the candlestick like this showing up. But again, we'll see. We don't know the future. It's cheap. It's undervalued. I do like it. And I think longer term, we are in a consolidation on top of, this is a consolidation pattern. I can bottom in there. That's the bottom. It's a 3-hump consolidation, a breakout of that consolidation. And then we have another 3-hump consolidation basically in here. And we're waiting for a potential break higher. Sometimes on the tips of these, they like to do this. And it gets everybody messed up. People go short and then they squeeze them to the upside and it just rockets. Very similar to what happened here. It's a little move lower and then rocketing higher. This one went straight to 75 from $17 a barrel. TTF gas down 1%. And we are underneath resistance here. That's going to act as resistance. Natural gas in America down 6.26% right towards the support level. There's that support line going. It goes all the way back, I think, 2009. Yeah, we got the humps. My humps, my humps, my humps. Yeah. Our boy XOP. Yeah, you know me. We are sideways today, down 0.09%. But that still looks good for a continuation pattern upward. Momentum is up. So that looks good, and hopefully we can break out of all of that, the neckline here. And we break through that, guys, game over. It is on like Donkey Kong. OIH, Up a little bit today. We're up against that resistance line. We'll see if we can punch through or not. I will find out tomorrow or maybe next week. Newcastle coal futures continuing higher today, 1.56% higher. I like coal here. We're back against support. We broke out here. This is a retest, so that's generally where you get the ideal entry point are these retests. There could still be a little bit left to the downside here, little shake and bake, so to speak, but it looks good. We're up against support, and we are seeing some buying pressure with that wick at the bottom there. So I think coal doesn't look too bad. We're early, but we'll see if we can turn this thing around or if we have to grind sideways for a little bit. Crop Physical Uranium Trust continuing higher, looking good. I like this candlestick. Real good looking candlestick there, 3.6% up day today, and we finished towards its closing price, which is very important. Looks great. Uranium futures pricing up 1.25%. Could this start to get some momentum built with SPUT going into a premium, going out and buying pounds? Eventually, it could do that. Very well could. So that looks good. It's developing here. Hopefully, we can get some follow through. URA up 0.75%. It's continuing. Looking okay. A little bit of wick at the top. URNM moving on up, looking good. URNJ also looking pretty good. And if we get a pullback, sometimes these things like to do this and put in like a double bottom. Very similar to like this action there. We could do something very, very similar to that. And if we do, I would be looking for an entry point at the 13, high 13s, low 14s here, if that occurs. And I'm not stating that it will occur. That's if. It's not a statement saying that it will. Copper continuing higher at 0.18. Nice little breakout there. And, it's good that these break out, but sometimes they do retests. And so it is a possibility that we do something like that before heading higher. So what I do is I'll buy the breakout, and then if it comes back and does a retest, I'll buy it back there as well. If it doesn't. COPX down 1.14, but still looks good to continue higher. Just a small little down day there. No reversal candlestick or anything. Iron ore, this looks good. And the reason I think it looks good is that we are squeezing into, this corner here. And we entered this from the downside up. And then this is your consolidation here. So this looks good to continue higher, way higher perhaps, whenever it decides to go. Aluminum still at resistance. We are still right on top of it. Nickel up 0.62%. This has been moving higher. It's looking good. We're coming up the right booty here. I guess there's no wrong booty, but this is the right one. We've got Mu down 0.75%. Underneath resistance, we'll see if we can punch through. We've got emerging markets down 1% today. We did have a stronger dollar, but I do think this will continue higher. If rates do fall, I think the dollar will fall, and I think emerging markets will go up. KRE down slightly, down 0.7%. Now you got to be careful here because when you get this momentum coming down, I'm starting to look at the patterns here. If they're facing up and they can't gain much momentum, that's your flag pattern where we could spill out again. So that's a high likelihood, just like this pattern here. These don't have a ton of buying pressure in them. They're real small green candlesticks. Momentum is still down here, just an FYI. Tan down one, this is the same, this is a continuation pattern, could be, to the downside. So the reason I say that is whenever you enter with big velocity, and then you come back up in a rising wedge, this could dump to the downside. We've got lithium. Now this one looks better, and the reason this one looks better is because the patterns are facing downward. So here's your ultimate bottom here, your double bottom, breaks out, you've got a retest. So you've got a fractal formation. And then when you fall, you want to see a pattern that's created downward. So that's downward facing, it's slanted downward. And this one too, we came up and then our consolidation is slanted downward. So these generally break higher. This looks like a really good setup to move higher. REMX, something very similar to lithium, except it's coming from a real low bottom, I'll call it. We came on up, pulled all the way back, broke the downtrend, and now we are trying to work our way back up, and I do think we'll be successful. It looks good. We've got the big greens and the small reds. Exactly what I like to see. Baltic Dry Index down 0.8%. We're coming back to some resistance over here. We've got XHB down 0.36%. This thing is right at the breakout, so we'll see if we can get a break here. So what would cause the break? Lowering of interest rates. Thanks for asking. Lowering of interest rates and mortgage rates dropping. So it'd be the 10-year specifically. But we do this. This is kind of a mixed deal here. We've got stronger selling pressure here and a smaller increase. If we punch out of it, all the better. We're going higher. But this could still roll over. It's still a possibility. I would say still a high possibility. Russell, again, these are getting a little bit harder to read because we do have some big candlesticks over here, but the overall trend has been lower. So is this a flag pattern which will continue lower? It could be. And this is where, if you're a trader, I wouldn't put anything on. I'd wait. I would not go long. I would wait to see what this looks like because there's patterns here that look bearish all over the place. SPX is in a similar situation. Downside momentum, this is a rising wedge where we could spill out to the downside. And that's what I would expect. I'll put a little bit better drawing in here for everyone. And this could, it could still take a couple of days to play out and get up into this tip here. NASDAQ, it's the same pattern, guys. Momentum's down. And what we're looking for are patterns that are, this is a consolidation which could step lower. So that's what I think this is. I think it's going to be bearish where we break to the downside. SMCI, it's the same thing. It's an inverted flag pattern that could potentially break lower. NVIDIA, again, we've got big distribution candlesticks up here. And that there is kind of rolling over. So what you're going to look for next is the patterns will be upward facing. And that is the beginning of a bear market. And that's a possibility. We don't know for sure, but that looks pretty top heavy. Bitcoin down 1.2%. Now, what we're looking for is this an upward pattern where we've got momentum coming down and this is going to break to the downside, or are we going to punch through upward? I don't know how Bitcoin's going to react here. I honestly don't know. The reason I say that is I look for correlations in the market. And then those correlations, I use them as further evidence. But Bitcoin didn't exist under the previous market condition of an expansion phase. It was created in 2009, and it has only existed during the recovery phase of real estate. We just entered an expansion phase. If we just entered an expansion phase, what this could be, if we go all the way back, is you get these big moves, and then eventually one could roll over and start to fall. And this doesn't go all the way back to 2009, but you move upward in the phase just like the S&P, just like the NASDAQ, and then eventually it rolls over with it. I don't know how this will behave. We don't have that data. Ethereum down 3.76%. It looks pretty blah. We're in the downtrend here. We've got upward facing patterns. This one broke to the upside, but again, we'll see if it bottoms or not. It very well could. And then MicroStrategy down slightly. This is a downward facing pattern, though. So it very well could break to the upside. And then we've got the VIX down 0.5%. It's holding on and steady. what I'll say at this time. But that's what I've got for today, guys. Give me a thumb up for the content. Subscribe to the channel, subscribe to the website. Special is the coupon code if you'd like to use it. We've got a 5 p.m. Mountain Time on Sunday question and answer session. We'll go over a few conference calls of companies that we all follow. So I'll give you updates on that. There's a couple of people who sent in some questions that I'll answer their questions too. But that's all I've got for today, guys. So we'll catch you next time. This is Finding Value.